Ladies and gentlemen, welcome back to the channel. Holy guacamole. AMC short interest is starting to rise a lot faster than we have seen in a long time. And we're going to get into that here in this video. Now, you are pre-Powell as well. So here, this is the last video that you'll hear me speak before Powell. What's the situation look like in the markets right now, pre-Powell? What do you need to know? There's a good chance that I think we get some hawkish rhetoric from Powell in regards to the last couple of months of bad inflation data. And I'll go over just my general opinions on this event. Now, I'm subject to be wrong. I could be right. Doesn't really matter. I'm just sharing with you my opinion in what I expect to happen. This is my personal opinion. Come to your own opinions and conclusions based on, everything you hear and everything that is discussed or has been discussed over the past couple of weeks or so. So let's go ahead and get into all of this information. Hit that like button, subscribe to the channel. Let me know what you think about this down below in the comment section. And what is your opinion for Powell as well down there? Let's see if we can get this one right. Trying to predict what Powell is going to say has been a bit of a challenge, to say the very least, over the past, couple of years. He really does surprise the markets sometimes. Sometimes he just comes in line like status quo. Nothing really changes. I think if there is a meeting for Powell to be a little bit on the bearish side, though, it's probably this meeting. Now, again, I just want to give you guys a run through of my expectations. I think my expectations are pretty simple. They're pretty clear. I think you're going to get a slight move down in the dot plot, which the last dot plot was on December 13th. I think instead of pricing in 2 to 3 rate cuts, we're probably going to get 1 to 2 rate cuts priced in. But remember this. This is very important. The markets have not been rallying based on the number of rate cuts. We started off the year at 7 rate cuts priced into the markets. We fell back down to 3. Now, I will say the S&P and the NASDAQ, broadly, the indexes, have been going higher in 2024. That's obvious. That's clear, right? Everyone thinks we're potentially in a bubble. This is, 2000 all over again. Well, it's the big tech stocks that have been doing the heavy lifting. It's your AI stocks that have been doing the heavy lifting. If you actually look at the Russell, it's negative about 2% year to date, not including the move that we are seeing today. And let's see, what's the Russell doing? Russell slightly down. So yeah, you're down over 2% year to date if you exclude SMCI and MicroStrategy. So if you include those two stocks, the other 1,998 stocks, you'd be down 2%. So a lot of stocks are down quite a bit in 2024. So yeah, going from 7 rate cuts to where we are now at 3 rate cuts has definitely hurt your interest rate sensitive stocks in 2024. That's for sure. I'm not going to argue with that. But broadly speaking, the markets, they're really not dependent on how many rate cuts we get. The narrative is the next move from the Fed is not higher, right? The Fed's not going to be raising rates. The next move from the Fed is lower. That's the problem. That's where I think you get downside in the S&P and the NASDAQ, because I think it's Powell's job right now to really come out and explain to the markets that we're on pause. If the data suggests that we should raise rates again, that's what we'll do. If the data suggests we should start cutting rates, that's what we will do. I think he wants to be very clear that there is still optionality of raising rates if Powell thinks they need to. Because the last couple of months, really, Fed officials have come out, seems like every single time, saying, yeah, we're probably at peak policy, peak fund rates. We're next cut's going to be, or next move's going to be a cut. And a lot of Fed officials have even come out and targeted, May as being the first cut. Well, I think you really have to push back on all of that guaranteed cut talk with the recent trends in inflation. I think the Fed is pretty traumatized from what happened in 2021 and 2022, where inflation was supposed to be, quote unquote, transitory and turned out to be, well, not so transitory. So I think the Fed realized they made a mistake, communicating to the markets in 2021 that inflation was going to be transitory. They made that call and they were confident in that call, and it proved to be otherwise. I don't think the Fed can come out today and say this inflation is quote unquote transitory, or the recent rise in inflation that we have seen is going to by itself just go away. So even if the Fed thinks that, I don't think they can come out and say that, because then, that puts their credibility back on the line. The Fed really has to, at the bare minimum, stay optional in raising rates. That's the bet that I'm making. That's why I am bearish on today's Fed meeting, because the reason the markets have been rallying is because you've been expecting the next move from the Fed to be a cut. Even if the Fed does not confirm they're going to raise rates, I don't think that's going to happen. I don't think the Fed's going to say, yeah, we're more than likely going to have to raise rates again. I don't think that's going to happen at all. But I do think there's a good chance that the Fed says, yeah, we could raise rates again. That's the bet that I'm going to make. And there is a 0% chance that the Fed raises rates again. If you take a look at the Fed rate monitor tool for December 18th, this is how you can look at, what the markets are pricing in for Fed policy throughout all of 2024. If you look at this contract, there's only a 1% chance that we don't get any movement from the Fed at all in 2024, that the Fed stays paused at 5.25% to 5.5% for the federal funds rate throughout the entire year. There's an 8% chance we only get one rate cut, 24% chance we get two rate cuts, and a 34.7% chance that we get three rate cuts. We're currently pricing in three rate cuts. If the Fed throws the optionality out there that they can still raise rates again if they need to, you're pricing in three rate cuts, 0% chance of a rate hike. That could be a little problematic, okay? At least I were to say so myself. You could be in for quite a down day, and ultimately you might break the streak of 251 days of no 2% pullback in the S&P 500. Yeah, this is by far the longest period of time that you have seen without a 2% single day pullback. It's been a long time. You have to go back to 2017, and you were at 350 days. But before then, the prior high was around 180 days. You've blown past that, and you're on your way to meet 2017's high. And that's just a market that you're likely not seeing a lot of price discovery. Stocks are likely going pretty vertical. It's healthy to see pullbacks. It's healthy to see big down days. Let people kind of reevaluate their theories. Let them get punched in the face a little bit. The only people that have been punched in the face in 2024 and really since November of 2023 have been the bears. And it seems like now, I guess, if you were bearish on inflation being stickier, higher for longer, just ramping up again, the bears are actually getting it right, but equity markets have not responded to it. So that's really my expectation from the Fed. I think you're going to get very little changes on the actual dot plot itself. But I do think the Fed, instead of pricing in 2 to 3 rate cuts, will price in 1 to 2 rate cuts. And I've heard a lot of people talk about this, but if you actually look at the Fed meeting dates themselves, if you don't get a cut by June, you're probably not going to get one in September, because the Fed wants to stay independent, and you're going to get a lot of people on both sides of the aisle that say the Fed is being political, trying to help out one party or another if they're cutting rates right before the election. Now, on the other hand, there's a Fed meeting the day after the election. So the Fed could just, wait until November 7th and cut rates, and that's going to be a lot less political. So June, July, those are the real meetings that we could get a cut before the election, is what a lot of people are saying. Could the Fed cut in September? Of course, but that would just be seen as maybe a political move and not something the Fed probably wants to get involved with. It would kind of be like underpinning your boss and doing a job your boss said he wanted someone else to do, or he wanted to do himself. You're going to be in a lot of trouble. You're probably going to get fired at that point, okay? So that's probably the best idea to avoid that situation all around. Just call into work that day would be a better alternative, right? So that's another thing that I think markets are generally not looking at. So you get another month or two of hot inflation, which it looks like we're going to. Yeah, and you're not going to be looking at cuts until probably November. At least that's what it looks like to me. Now, if we take a look at AMC, the short interest is starting to explode higher. You've went from about 13.25% yesterday to 14.07% today. Almost a 1% jump in the short interest. That's something we have not seen in a while. The short interest numbers starting to get to this, starting to get extremely high on AMC. You're not quite to extreme levels on the short interest, which is around 20 as most people categorize, but you've went from 7 to 14%. You have doubled the short interest in the last month and a half, the last 2 months. I mean, if you wanted to see AMC go through some sort of short squeeze, and you wanted to see people get excited for a potential short squeeze, you got to get this short interest number on Ortex higher, and that is what is happening. So I do believe this is good news. I think a lot of us understand, a lot of us are under the same conclusion that the short interest in AMC is likely a lot higher than 14%. That's my personal opinion. I cannot prove that, though. So the best I have is these Ortex numbers. Now, you currently have $157.58 million currently in short positions. Days to cover 2.47. 36.9 million shares that are currently sold short. 52.44 million shares currently out on loan. Cost to borrow 1.09%. Utilization of 64.83%. And a short score of 69.11 out of 100. So decent numbers over here as well, but nothing's drastically changing. We don't have any option activity from hedge funds and institutions to speak of. No interesting order flows at all today, and really we didn't see any yesterday as well. If we take a look at this Donko Tracker data, you got about 2,400 calls currently in the money, 42,000 calls out the money. In the money puts at about 6,400, out the money puts at about 16,000. So decent amount of option activity for this week. I think you're going to see things really start to ramp up after the Fed today. So that's the big thing that is really going to, I don't want to say this, make or break our markets is the Fed. I mean, the Fed has the potential to send the markets into a full-blown correction if I am correct. If I am correct, basically what I'm implying is you're probably going into a correction, right? If the Fed is status quo and nothing really happens, then that's going to be a little bit different, and maybe stocks just continue higher. Because there's another aspect to this Fed meeting today is you may get a change to the balance sheet runoff. So if the Fed changes balance sheet runoff, they lower that, so there's less restriction in the bond market, meaning less upside pressure on yields from the Fed. Well, what does that mean? If that's met with a Powell that is bullish talking about rate cuts, you're going to further widen this bubble. The cryptos, stocks, real estate, everything. That's not exactly helping get this last round of inflationary pressures down. So that could be a little problematic as well. Now, if we take a look at stock twits today, how retail investors are feeling about AMC, people are extremely bullish with sentiment readings of 76. Yesterday, you were bullish at 58. So people are pretty dang bullish on AMC today, regardless of the stock being down about 2.2%. Message volume is normal at 51, and the participation ratio is normal at 55 today. So not too much is changing as far as these two metrics, but for whatever reason, people are very bullish on AMC today. I don't know if I'm missing something. I don't know if there's something that I should be talking about here or what's going on, but yeah, people are very bullish. And again, let me just give credit to the bullish side. If we do get a Fed that is in line with what the markets are expecting, 2 to 3 rate cuts, a slowdown of quantitative tightening, AMC stock and interest rate sensitive names are going to rip faces off. They are going to fly today. Okay, so if I'm wrong, AMC is likely to have a very good day coming tomorrow. The percent of stocks above their 50-day moving average today is up 1.21%. That's a good thing for the bulls heading into the Fed. Now, if we take a look at AMC stock today, like I said, down about 2%, you're finding more resistance around that 50-day moving average. If Powell's bullish today, you're going to blow past that 50-day moving average likely today, if not tomorrow, and then proceed to rally, in my opinion, about 35% up to that 100-day moving average. Your RSI is sitting at 42, so pretty neutral, slightly on the the bearish side today, and your MACD is not really doing a whole lot of anything. And I would say overall, AMC's kind of just treading water here. A lot of people are waiting for the next catalyst, the next bit of news, the next event. And today and after hours, we have that event. So I want to be clear. I think Powell's going to be a bearish event. Bearish in his tone, kind of slightly bearish on the dot plot. He's going to bring up optionality, that the Fed still has the option to raise rates if inflation does continue to come in hot. That's not priced in the markets at all, literally 0% odds. That could be a little problematic. And then you do have the bullish side of this, where the Fed's likely to slow down their bond runoff of their balance sheet from $60 billion a month in treasuries down to maybe $30 billion a month. $30 billion of mortgage-backed securities down to likely $15 billion of mortgage-backed securities. Those are going to be positive catalysts. You have the negative catalyst from a hawkish rhetoric from Powell. I don't know exactly how the markets are going to respond to that. They're probably going to respond more to the fact that the Fed may raise rates again. But I don't know. The Fed might kick the can down the road, want to see another month or two of data before getting hawkish on the markets. I have no idea. If that's the case, AMC stock is going to rocket higher. So I do think you're at a very critical moment for AMC. If you wanted to see a breakdown or a break up in the stock, I think you're going to get that throughout the rest of this week. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.